You watch metals and markets every week, yet still shop with the big guys? Why pay more for your precious metals from the guys who have offices on Wall Street and who bank with JP Morgan? From the basics like eagles, maples, rounds, and bars, to collector coins like Silver Shield and Heroes, SD War Collection, to our exclusive new line of insurance, approved, TL-rated precious metal safes, SD Bullion is what you're looking for. At the lowest prices, period. Guaranteed! Because if you don't hold it, you don't own it. SD Bullion, founded by stackers to help you prepare for what's coming. Shop with the doc today at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, we had a big spike this week here in the metals, which is nice to see, especially with both oil and the equity market in general rolling over here the second half of the week. Silver spiked up to, I think it was above 1730 on Wednesday. Gold rallied almost to 1250, cleared well above 1235 on Wednesday. Traded off slightly the last couple days of the week here, but both gold and silver are closing the day here on Friday above the significant technical levels of 1200 in gold, and silver closing above the 17 level where it was capped at last weekend. So promising weeks in the metals, particularly with what we've seen in other markets as well here this week, Eric.
Yeah, indeed. And, you know, this is a great example of what we talk about a lot in the managed retreat. You know, we had silver and gold spike up earlier in the week, and then last Friday, as we reported, GOFO switched over to positive across the entire curve structure, and it remains positive now. And it just goes to show that the cartel liberated some physical supply, but excessively tapped vault supplies out of London, and then, GOFO being negative as a reflection of that showed the cartel footprints that we were watching over the course of the earlier part of this month. And then, we bottomed in early December, and now we had this multiple, we had two upside moves, reversals on Fridays, and then the day after the Swiss referendum, and then earlier strength this week. All of that goes to show that there has been considerable amount of response with the lower prices eliciting demand, and people, particularly in Asia, but even in the Western economies, going after gold and silver. We had silver completely sold out of the German retail supply chain earlier this month, and actually a little bit in November too, if memory serves. And then the U.S. Mint going on allocation, and same thing with the Canadian Mint, and on and on and on. The effective bounce that we've seen in the equities as well for the mining space. So, all of these kind of things painted the picture that led up to this week, and here we are in the last 3 days. We see silver more so than gold, but even gold to some extent kind of trending along in a relatively calm, far less volatile, tighter channel style trading pattern, while at the same time, you have oil falling into the 50s, as you mentioned, and the turmoil that we see in the stock market and all that. So this is actually a really great textbook example of what we talk about when we mean, or what we mean by what we talk about. If I can not trip over my tongue here, when we speak of the managed retreat, and that's what we're seeing today. So it's pretty amazing. But a lot of monumental news things happening on the news front right now, and we'll dive into that today. So why don't we jump into that? Austria is the latest country to indicate that they're examining the prospects of repatriating. We have had Belgium issue similar remarks, and the
Netherlands are considering it as well.
And then right-wing party in France that most likely will take power in 2016 is talking about it as well. What we're seeing here are, the stewards of this whole Western, Anglo-American in particular, financial establishment with our central banks running the show, realizing that the game is up, that the credit fiesta that we've been on since the complete abolishment of the Bretton Woods institutions and moving on to the petrodollar standard in the 1970s, and the explosion of the financialization of the Western economic establishment, has run its course, and there's going to have to be some kind of day of reckoning. And it probably will be a combination of a process that takes place over a number of months, and then also maybe some kind of a banking holiday or some kind of reset of some sort. But a lot of times people have looked at the question of, when is this going to happen, and basically drawn the possibility of it being something that can happen in the very near term. And I've always been skeptical about that because many of the major players at the table were nowhere near ready for that kind of thing. I mean, the depth and breadth of the Chinese credit market and the degree to which it's open internationally is such that they have been a long way away from being able to make the renminbi 100% convertible. That's a requirement for some kind of a reset. I mean, you basically can't have China at that table in this some kind of new economic order that's going to be established if their financial markets are not mature enough to take on a much larger role in the international settlement process, trade currency reserve status, and whatnot. And frankly, all of the kind of geopolitical things that we've been seeing in the last 18 months or so have made both China and Russia accelerate the path at which they envisioned moving. And it's very clear now that, maybe even as little as a year from now, sometime even in 2015, some major changes can happen along the lines of the reserve status of the dollar. I don't think it's going to be completely transitioned away from in 2015, but we're going to see a lot more big milestones along the road to that path. And we saw one just a few days ago when Putin basically put up his hands and said, enough is enough. I'm not going to deal with the uncertainty of Bulgaria and other European players, and I'm going to move my pipeline to Turkey. And that kind of change has tens of billions of dollars of impact to the economies of Eastern Europe. And those kind of actions are the kind of things that one would expect to see happen more frequently as we move forward with this geopolitical stress that's going on and the strains in the financial markets and whatnot when it comes to excessive debt. And the bottom line here is that we're now seeing even the central bankers around the world in the Western economies looking over their shoulders with a little bit of fear because the end game is visible. Everyone can see it now, and it's like a game of musical chairs. The Austrians, the Belgians, and other central bankers that are considering repatriation of their gold speak out of both sides of their mouths. They try to paint gold as the barbarous relic, but in reality, gold remains the bedrock of the financial system. And whenever you do a financial reset and reorganization of the global currency systems and whatnot, gold always, at least within last 5,000 or some odd years, has served as the bedrock of the financial system. So I think that's really the big story that's happening here. Under the scenes and under the radar to some extent, and that's that even the powers that be within the financial system are beginning to signal to each other, to the masses, that things are about to change. It's only going to be a matter of a couple of years at most.
And the Austrian gold reserves aren't an insignificant amount. Austria has 280 tons of gold reserves according to 2013 numbers, with about 225 tons stored at the Bank of England, which is the main location that the Austrian Central Bank is saying that they need to address concentration risk. That's one way to call it, concentration risk at the Bank of England. So it's certainly not an insignificant amount. Well, it's nothing like some of the larger nations like China or what the U.S. claims it has as its reserves. Actually, the banker's actually coming up with 225 tons should they be demanded. That definitely is market moving.
Yep, indeed. And France is in particular very risky to the Euro Union. I mean, basically, if France decides to repatriate their gold and move away from full participation and support of the euro, then the euro will suddenly come into focus. And all these things can happen as early as 2016. And if that were to happen, then the whole timeline for some kind of a reset of the currency exchange system globally will accelerate massively. I mean, if the euro is no longer a secondary competing alternative currency for reserve and trade settlement status versus the dollar, then we're talking about an entirely different game out. And I think that that's going to happen. That will be in the headlines in the latter part of 2015 as the Conservative Party moves to take over France. And this is yet one of these black swans out there that is just beginning to get into focus, and you can see how the outline of it will impact world events going forward. Another thing that could conceivably shake things up on the short term is what's going on in Venezuela right now. I mean, the country is on the verge of declaring bankruptcy, and they're having difficulty getting further credit. They've already taken out about $50 billion or so with China, and China's not exactly sure if they want to double down with Venezuela, even though they have a pretty decent working relationship with the country. And you can add that on to the near-term dynamics that are shaking things up. There's a huge amount of turmoil that's going on in the markets just underneath the surface, and it's been hard for even the average financial participant, the average stockbroker or what have you, or bond trader or whomever, to see all these big picture dynamics, because papering over things and the QE process of our central banks have basically hidden all of these problems. I mean, it's like that old Warren Buffett saying, when the tide goes out, you get to find out who's swimming naked. And we're going to start seeing many a country and many a trader naked out here.
So, we were kind of chatting before the show, Eric, that you still are, most in our sphere, or I shouldn't say most, quite a few have been predicting big economic events in 2015. Really, in general, across the mainstream, that's still a fringe belief that really across the mainstream, most believe that good times are here to stay again in 2015.
Yeah, and it's not for lack of some supporting data. I mean, the mainstream financial participants look at things like the recently reported consumer confidence index numbers, and they say, oh, gee, went up 3 or 4 points. Went from 88.8 last month to 93.8 for the Thomson Reuters University of Michigan's preliminary December index of consumer sentiment. And, the consensus per Bloomberg survey of 69 economists, we're looking for 89.5%, or 89.5 on the index, excuse me. And, that's a huge upside surprise that's predominantly driven by the decline in gasoline prices. So, the mainstream economist world, the mainstream financial folks on CNBC and Bloomberg and so forth, when they're doing their talking head stint on television, refer to things like this, and they, point to the picture of relatively all-time highs maintaining in the stock market. All that, even though we had a lousy Black Friday, even though there are indications that the holiday season probably is going to suck when it comes to overall economic activity and whatnot, people are still in a bubble. They can look out into the world and see things that seem somewhat stable still. We're still in the eye of the hurricane, but it's not going to be too long before we start seeing data that supports much less confidence in what's going on. And in the precious metals community, for the most part, most people are contrarian in nature, and so we tend to look around and see lots of indication about how things are not as they are being presented in the mainstream media. And there are times when it seems a little hard to determine whether or not we're in some big echo chamber and there are too many people making the forecast that things are going to fall apart, and that therefore, markets tend to do the exact opposite of, where the consensus is. But in reality, the take-home message that, that Doc and I were talking about before we started recording today is that it really does seem that, even though when we look around as participants in the precious metals community and see a huge amount of bearishness and people making forecasts about 2015 being, the day of reckoning and so forth, the reality is that that level of understanding and takeaway from the markets is still in the extreme minority. It's important to put that into context, because I think that there's going to be a lot of surprise coming in the January period, and we'll talk about this more in probably the next show or show after that, just to flesh it out and try to get it on the record before things unfold in 2015. But I think 2015 actually is going to be a very, very tumultuous year, both on the geopolitical front and when it comes to financial markets. I don't think we're going to see the dollar lose its reserve status, but we're going to see a lot of major milestones along the path towards that eventuality.
Wanted to give listeners a quick update as to the physical market, what we're seeing here in gold and silver, the physical wholesale markets here in the U.S. One interesting new piece of info I do have to share and pass along: the U.S. Mint has advised the primary dealers that the 2015 coins will begin on an allocation. So that is official confirmation. I've been expecting that really since early November, so it doesn't come as too much of a surprise, but they are allocating the coins, and they're not, at least with like the Royal Canadian Mint, they advise all of the authorized dealers what their allocations will be in the weeks ahead, so they'll know exactly how many coins they're allowed to purchase, say, next Monday. The U.S. Mint doesn't work that way. They just let the authorized dealers know that, hey, you're not going to be able to buy as many as you want, just a heads up, and they're not given any information ahead of time as to how many that is. Is that 5 million coins or 5 coins? So it'll be interesting to see with Silver Eagles. Again, we're probably not going to see then a new sales record in January, even with these low prices, because the Mint will be allocating coins. So don't be surprised if premiums on Silver Eagles for the 15 dates start to rise and spike a bit, depending on what those allocations are when the U.S. Mint does finally release them. I think the third week of January is when they're stating that they'll make coins available. So it's about 6 weeks from now that they'll make the coins available. So we'll keep an eye on that. It'll be interesting to follow as we head into January of 2015. All right, we'll wrap this week's show there. So again, closing here on Friday, both gold above 1,200, silver above 17. Very promising trading here the second half of the week, particularly with the oil market and the equity market here on Friday in free fall. And then just late breaking here as we record the show, France has downgraded, or Fitch has downgraded France to AA. So it'll be interesting to see as the markets open Sunday night in Asia whether the sell-off continues and the pain continues. Really, next week will probably be the last week with any volume ahead of the holidays the week after. So keep an eye on that, but promising trading here in gold and silver to close out the week.
Just to toss this out too, for the very short term, it's possible that we're going to see prices come under attack, and that the thin holiday trading is going to be an opportune time for the cartel to, in fact, execute that kind of an operation. But the managed retreat discussion that we spoke about opening this show is really relevant here, because it supports the thesis that the early December lows were in fact the bottom, and that we will not likely take them out unless if the cartel wants to do operations that risk putting the physical market at a level of strain that's at epic historic proportions. And that's not just some kind of qualitative opinion that I blather out. It's demonstratable in the GOFO rate statistics. And now that GOFO has stabilized, it behooves the cartel to not continue to do things that will put the entire physical market in extreme strain. And there is huge amount of physical demand going on. I mean, India practically took down 200 metric tons of gold in the month of November alone. I mean, it's just phenomenal how much gold is being consumed around the world. So anyway,
with the follow through in trading this week in silver, I think the case is just as strong, if not stronger, in silver, where silver traded down close to 14. And now has spiked back above the previous support resistance level at 16, is actually now trading above the downward wedge that it's been trading in since 2011. Now that said, don't be surprised in the next week or two if silver trades down to test the top of that down wedge, which is I think somewhere around $16 an ounce right now. But technically speaking, it looks very healthy. So
it would be actually more probable than not that would happen, because basically, right now people are looking at the technical picture and saying, oh, gee, the things have improved a lot, and Early December, it was the exact opposite. People were calling for, lows as low as 9 on silver and so forth. And that frequently happens. Technical analysis, when it comes to precious metals, are almost like a contrary indicator when you set it into the context of a bigger picture. And I think that's what we're seeing here right now. So bottom line is that, we may see some pressure coming back in sometime in the next 2 weeks, probably next week actually, and in the latter part of next week. And then, people are going to begin to say, oh boy, the whole upside that we saw was a false start, and that, they're going to second guess the bottoming out again. So, beware. That's probably what's going to happen in terms of the most probable events.
All right, we'll wrap this week's show there. So we'll keep our eye on the trading over the last couple of weeks here of 2014. For the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.